Thank you, and thanks for the opportunity. Let me just bring up the presentation. Okay, so I'll be talking about the question, can microinsurance bridge the insurance gap in Africa? And of course, in dealing with this particular question, we need to unpack what various components of this question mean, which I'll start by doing. And then we'll, since it is a technology conference, we'll obviously give it a bit of a tech flavor and answer it from that perspective more than from a commercial perspective. So I'm first going to start with a definition of microinsurance. And I'm doing this because microinsurance can mean different things to different people, especially within the African context. And I'll share with you what we believe the definition is from a IO perspective, but bear in mind it may obviously be different for different people. I want to see the slide, and our definition in its simplest form is that IO believes microinsurances should really be targeted at the connected but unprotected. And the reference to connected, of course, in this context means, given our partnership with MTN as a telco provider, the ability to engage with someone who does own a mobile handset. It is, of course, an important piece of technology in individuals' lives on the continent. And so that obviously excludes individuals who may not necessarily own it. We may, of course, look at providing cover for family members, etc. But I won't be talking today about the market that does not own a mobile handset. I'll in particular refer to the mobile handset target market. But more importantly, our definition is those who own the mobile handset but remain unprotected. And what I've done is just share with you, out of interest, pictures from actual claims documents that we have received from an IO perspective. And what you will note from these pictures is these are claims or photos of claims for our hospital cash product. And by no means is the standard of healthcare that some of our customers are getting in some of the markets in which we operate at a standard that any of us probably are used to. You can see makeshift treatments in the various clinics or hospitals that especially some of our customers in rural areas go to. To the top left, you can see, for example, a carton box being used as a plaster of Paris type treatment. This is many times just tied with rope or with tape. You can also see drips and also sticks and rope being used as a mechanism for plaster of Paris. And this is, I won't say necessarily all our claims that are like this, but a fair number of our claims have got this reality attached to them. And so our definition of the connected but unprotected is really individuals who have access to a form of technology, but may not necessarily have access to proper healthcare facilities or services in their respective countries. And so they would constitute our target market and our definition of microinsurance. Of course, when we talk about microinsurance, in general, it is low-income consumers, those who have a irregular form of income. And really what it's for us all about is to look at solutions and assist them about how they can protect themselves and their families when there is an external stressful event that typically results in loss of income. And the reality is that for many of populations on the African continent still today, they don't necessarily have sufficient amount of savings or any other form of cushion to back them in a time of need when such an external shock occurred. And for us, it's really about improving the quality of life for these populations in Africa. And that's why we're passionate about what we do as an IO team. So that's the definition of microinsurance. The next thing we obviously need to look at is there really an insurance gap before we can answer that question? And I'm going to focus on the bottom left here where, since it is a technology conference, I made an attempt at defining a developer formula here, but basically what it says is, and there's many research papers backing this, more than 50% of the countries in Africa still have an insurance penetration rate of less than 1%. Some studies say 2%. And so I think by and large, this isn't necessarily up for debate. There's sufficient evidence and confirmation that there is still a massive risk insurance protection gap on the African continent. And by and large, traditional forms of insurance does remain out of reach for large segments of the population. Who is I then? Just maybe quickly an introduction about who we are. So we're an MTN subsidiary. We're part of the MTN FinTech Strategy Unit. We launched in 2017. The markets in which we operate is Ghana, Uganda, Zambia. We recently launched in Cote d'Ivoire this year. And I think it's fair to say from our perspective, we do believe that we can play a role in closing the insurance gap. I don't want to pretend at all that we are trailblazers. There's been a number of organizations and companies that have done fantastic work in the field of microinsurance in Africa. So we're not claiming to be the first, but we do want to make a difference because we do believe there is a massive need. And in the 4 years since inception, we have enrolled 14 million customers onto our platform. The bulk of these, obviously, from Ghana, Uganda, and Zambia, because we've only recently launched in Cote d'Ivoire. And our vision is really to continue rolling out our proposition to other countries where there is this large gap in terms of servicing individuals with proper financial services products. And it's really about enabling them and making that difference in people's lives. The moment we talk about microinsurance, we do also have to talk about disrupting the traditional insurance model. This is just a picture of me at our launch recently in Cote d'Ivoire for our microinsurance product there. The products in that market include life cover, hospital cash. Our products cover both accident and illness. And so in some respects, again, depending on the market in which we operate, it does to some extent overlap a little bit with traditional medical aid, etc. But really it is about end up in hospital either for accidents and illness. And we do believe that our proposition has the ability to disrupt traditional insurance models that still remain either expensive with product designs that are not necessarily suitable for this target market. And so when I'm answering the questions today, can microinsurance help close the insurance gap in Africa? Obviously, it is important to note we are subjective. We don't claim that we can do it all, but we do believe that we can make a contribution in closing the gap. So let's get to the meat of the question. What are the relevant factors that we need to consider in answering this question about closing the insurance gap in Africa? I'm going to use this model. It is widely used in terms of measuring the microinsurance market, where we look at things like accessibility, affordability of products, the attractiveness of benefit design to customers, and then the overall relationship of trust with customers, and should apply between insurers, and how we distinguish that between bad faith. Since it is a technology conference, I will, in unpacking these factors, obviously talk about technology-specific issues, not necessarily other market development issues or commercial factors. So let's start with the first one on accessibility. Our argument is, and I think it's fair, that the game changer really in Africa has been the heavy lifting that mobile telephony companies have already done. The widespread availability of mobile handsets across the continent is really the key enabler that has helped to close the insurance gap. But we have to go a layer deeper, and it's not just about ownership of a mobile handset. We have to talk about the type of handset. Many of our customers still only have feature phones, not smartphones. Where they do have smartphones, it's mostly entry level, and that obviously impacts the channels through which we can target them and the user experience that we create for them. But more importantly, in terms of enabling accessibility, is the costs associated with these channels. So we do find many customers still prefer engaging with what is probably an older piece of technology by now, which is USSD. But the reason they do it is not only because it renders well on feature phones, but also because it is free of charge to our customers. Those who have entry-level smartphones, as an example, there we try and negotiate with our local MTN OpCo that they zero rate the app. Again, we believe that is important to help drive this principle of accessibility, because we want to make it as easy as possible for customers to engage with us. And if we then start talking about the challenges on this specific dimension, and I'll mention two in this example, the one particular risk that we're facing is government intervention. We've seen in one of our markets, I won't mention a name, that recently had elections, that governments simply either switched off networks or blocked specific access to social media. And in our view, that poses a particular threat to the accessibility dimension of enabling microinsurance and closing the protection gap. This is not a widespread issue necessarily upon the African continent, but in specific countries, this is a massive impact. And so we had practical examples where, for example, Facebook was switched off. That impacts WhatsApp as a channel. And so that takes you into a space where you need to design for alternative channels, anticipating this risk. Another example, obviously from a technology perspective, is when we talk about accessibility, platform type businesses, we need to talk about scalability and 24/7 availability. So the other side of the coin here is, just because the mobile handset enables access, the challenge that it creates from an organization or company point of view is it requires 24/7 availability, and that is a challenge to manage in practice from a call it traditional IT shop perspective. But on this dimension, I would argue that by and large, we can close the insurance gap. There's more than enough opportunity through the use of technology to close the challenges that historically we've been facing in accessibility. Let's then get to the attractiveness dimension. Typically, this talks to product design, benefits, etc. I think it's well known by now that microinsurance products typically should be different from traditional insurance product design. There's got to be more flexibility, pay-as-you-go type solutions, the ability for customers to stack policies or cover as and when they can afford it, simplicity in contract engagement. USSD as a channel in particular forces us into simple terms and conditions in terms of engagement with our customers. And so let's assume from a commercial point of view, we can design products that are attractive. The question then becomes, what are the challenges from a technology perspective? And here what we find is that the key debate that we always come back to in product design is ultimately how much choice do we extend to the customer. So in order to have a scalable platform, keep things simple, keep your cost per policy quite low from a technology stack point of view, you want to make sure that there's not too much variation, because that impacts your development life cycle, your testing procedures, etc. So implicitly, there's inherent costs attached to it. But at the same time, if you don't provide enough choice, then clearly you're cutting off certain segments of the market from getting access. And so for us, I think this is a particular journey that we're still on. I think the jury is still out on whether ultimately we can close the insurance gap by really giving customers what they need from a micro target market perspective. The other example maybe that is also a challenge is like most platform models, we find that signing customers onto the platform from a subscription point of view is a challenge that we can get over. That's the first hurdle. But the next hurdle is to keep them from spending, get them to continue spending actively on the platform. And just because they've enrolled for cover, or let's say initially engaged, doesn't mean that they remain engaged from an active spending point of view. And there's costs associated from maintaining a customer from a subscription point of view, but not attracting revenue. And so I think where in terms of accessibility, we have a stronger view, we can close the gap. At attractiveness level, I think the jury is still out on, can we do it in such a way that still makes economic sense? The next dimension I want to go to is affordability. I think it's obvious that premiums for microinsurance products need to be sufficiently low in order for customers to afford it. But let's talk about maybe some of the IT challenges here. Clearly, it is about scale in our context. So we, from an IR perspective, currently have 14 million customers on our platform. Every, let's say, million that we add to the platform, we can reduce the cost per policy. And we want to keep that cost per policy sufficiently low. But there is a particular scaling challenge here and a particular cost associated to the technology itself. So whether it's cloud hosting costs, etc., clearly that to some extent provides a limitation on our ability to close the insurance gap. But there's also other things which isn't necessarily a, let's call it first order technology dimension, but more second order dimension. And that is in relation to things like VAT and excise duties, where we see in particular on airtime as a collection method in our instance. So we primarily collect premiums via airtime or mobile money deductions from mobile handsets. And we see in some of the markets that we operate, regulators effectively imposing a double taxation. So when a customer purchases airtime, they pay VAT on that spend, but of the net airtime remaining, if they spend that for the insurance premium, they taxed again. And that is not a great outcome from a financial inclusion perspective. And clearly, governments would like to earn revenue, which is, of course, understandable. But it is a, call it regulatory dimension to an overall technology enabler, something like airtime or mobile money, that ultimately limits the ability to close the insurance gap.
Marius, you've talked about a couple of minutes left.
Yeah, my last slide. On the trust dimension, it is at the end of the day really about trust. We are dealing with a target market and individuals that are engaging with insurance, most likely for the first time in their life. And it is important that we honor claims and pay those claims as quickly as possible. Here, one of the key challenges, given our volume of customers at the moment, the volume of claims that we receive, is there is no way that we can do it without a level of automated claims management. And here, interesting challenges, if you remember what I started with pictures of actual claims, is customers try and edit the pictures that they sent that results in fraudulent attempts at claiming. We need technology capability to pick that up. We need automated decision-making technology capability to deal the large volume. And again, these things ultimately comes with a particular cost attached to it. But this is really what we need to get right if we want to properly close the insurance protection gap. So those are kind of the four dimensions that I did want to talk about, just to answer the question. But in summary, we do believe we can close the insurance gap in the African continent. Yes, we accept it's a subjective view. We believe we've made some good inroads. Technology plays a very important role in being able to do it, but definitely lots of challenges remaining, especially on the cost, regulatory, etc. front to do it properly. Thank you.